Crossing $700 billion in wealth isn't just becoming rich, it's stepping into a completely new financial reality. At that level, money stops behaving like money. It becomes power, influence, and a long-term wager on the future itself. Elon Musk didn't reach this number through a traditional path. There was no steady salary, no safe dividends, and no predictable climb. Instead, his wealth was built on extreme risk, delayed gratification, and a willingness to tie his personal fortune to outcomes most people wouldn't dare touch. Unlike most billionaires, Musk repeatedly chose ownership over income. Early in his career, he sold successful companies and reinvested nearly everything into new ventures that were far from guaranteed. At multiple points, he was close to running out of money entirely. Rather than diversifying to protect himself, he doubled down. This decision defined the structure of his wealth. Instead of cash, he accumulated equity. Instead of stability, he accepted volatility. His net worth didn't grow smoothly. It surged in massive jumps whenever one of his bets paid off. The most important of those bets was Tesla. For years, Tesla was dismissed as unrealistic, overvalued, and on the edge of collapse. Production delays, funding problems, and relentless criticism followed the company at every step. During its worst moments, Musk personally injected his own money just to keep it alive. But the real turning point wasn't the cars. It was how Musk structured his compensation. He rejected a traditional CEO salary entirely, and instead tied his pay to extreme performance milestones. If Tesla failed to reach specific market value and operational goals, he would earn nothing. If it succeeded, he would unlock massive stock options. That gamble eventually paid off. When Tesla hit those targets, Musk's stock options became worth roughly $140 billion. Recently, a court decision reinstated those options, instantly restoring a significant portion of his net worth. This wasn't a paycheck for showing up to work. It was a decade-long bet that Tesla could become one of the most valuable companies on Earth. And that bet worked. What pushed Musk into the $700 billion range wasn't just Tesla's past success, but its future potential. Shareholders approved a new long-term incentive plan tied to even more ambitious targets. If Tesla reaches those goals by 2035, that compensation could be worth close to $900 billion. This means Musk doesn't get rewarded for what Tesla has already done. He only benefits if the company becomes dramatically more valuable than it is today. At this level, compensation is no longer about income. It's about ownership of the future. Beyond Tesla, Musk's private ventures quietly amplify his wealth. Companies like SpaceX don't trade on public markets, meaning valuation increases directly boost his net worth without daily volatility. As these companies grow more essential to global infrastructure, their value compounds behind the scenes. This creates enormous wealth that is powerful but largely illiquid. Wealth that exists more as influence than spending money. It's important to understand that Musk's $700 billion isn't cash sitting in a bank. It's theoretical. Selling even a fraction of it would affect markets and reduce its value instantly. This kind of wealth represents control over capital, industries, and long-term direction rather than luxury or consumption. In the end, Elon Musk didn't become the world's richest person by chasing money. He chased outcomes. He tied everything he had to a vision of the future and accepted the possibility of total failure. Crossing $700 billion isn't about being rich. It's about planting a flag in the future and betting your entire life that it will arrive.